Hey, Neil, thank you for making my day. I was so eager to respond, but you motivated me to gather my thoughts. The idea that the US dollar will lose its dominance is not new, particularly since the creation of euro. From 2003 to 2008, euro's value was increasing, but since then, which is essentially the financial crisis, euro has been declining significantly against the US dollar. And some now even believe that the creation of euro was a poor decision because European countries have varying economic growth and debt levels. And despite holding 19% of global foreign exchange, the euro's decline in value raises concerns about the potential success of the BRICS currency. And to assess the potential of BRICS currency, I think it's important to examine each of these currencies individually. Remember, China is a communist country with very strict capital controls. They limit the movement of its currency outside its borders, making it impossible to become a global currency while it remains controlled. And Russian ruble, as we know, has been struggling, and the Indian rupee, unfortunately, has also been losing its value. In essence, all BRICS currencies have been losing value against US dollar, what basically making USD the most reliable currency for investments among this bunch. So it's unlikely that any of the other currencies will replace the US dollar for at least 30 to 50 years, and I think even more. The US dollar also comprises almost 60% of global foreign exchange reserves, whereas euro has it at 19% and Chinese RMB is at 2.8%. And the rest of the currencies hold an even smaller share. And by the way, please note that if the US currency does actually lose its value, it is it could be actually a very positive development for US companies as the services of the US companies is going to become more attractive to foreign consumers. And when someone purchases from a US company like McDonald's, more United States dollars are going to come to that US company, raising its revenue and therefore its stock value. So the question is, how do we as smart investors hedge against the potential devaluing of US currency? Well, for that, I want to share a quick analysis with you. When you compare the rise and fall of the USD against the performance of the S&P 500, you'll notice that the rise and fall of the USD impacts the stock market in the short term, but in the long run, it has no impact where the stock market actually has been growing, which is the S&P 500 with a 10% compounded annual growth rate. Therefore, for smart investors like us, we need to think that what do we do so that we don't get impacted by the devaluation? And the answer is invest in good quality assets. And these good quality assets are essentially good quality companies that have a proven track record of producing value for their shareholders. And even Warren Buffett advises the same thing, where he says that investing in productive assets like companies that produce tangible goods can be more beneficial than investing in something like gold, which only has a psychological value. And I even teach these concepts in my free lectures, and I even plan to discuss this in a presentation today at Nunban Foundation, where I have a webinar at 7 p.m. Central. But seeing that there's so much chatter on this BRICS currency, I think today I'm going to start my presentation on this topic. So, anyways, thank you, everybody. And thank you, Neil, for bringing this up. Bye bye.